Welcome, ladies and gentlemen. It's Anthony with Simplified Profits with over 23 years of experience. We're doing a long overdue video. Haven't been on in a while. I've been just kind of busy hustling, hanging out with the family, just kind of enjoying life. Market's been kind of boring for a while, almost just straight up, which actually had us change up our style a little bit, and we'll dig into that here in a minute. Right now, just kind of want to show where our transparent account sits for the year. Going into June, up 50% year to date. You can see the month breakdown here. Had 7% for January, 4% for 7% for January, negative 1.32 for February, 27% in March, negative 6 in April, 18% in May, putting us at 50% overall. So definitely killing the market by almost 40%. And the market's been, I'm going to close this, and the market's been kind of rare. Usually there's more pullbacks within, it took, and let's jump off of SPXL and go to SPY. It took from beginning of January all the way to mid-April for an oversold pullback. That is rare. You can see it just kind of walked up the 20-day moving average. Usually you have multiple oversold swings within a year, if not close to it, or you can tell kind of when they're bouncing off the 20. I think this market actually surprised everybody the way it walked up, since January, really since last November. But, January of this year, its first pullback, it went 3 months basically and up 11% before it pulled back, and that's on a 20% run last year. As always, we wait for the pullback. Now, if you were watching the stochastics midday on Friday, you would know that when that was at its low, right around that 50-day moving average, that was actually 20, the stochastic. So we were in oversold territory, and it bounced right up. Basically what we've been doing is watching the smaller moving averages, so we've been basically trading what we would do in simplified profits on the more shorter term moving averages. Now, I wouldn't really recommend that until you have some experience with the normal trading strategy, which is on the daily, under the 200-day move or over the 200-day moving average, and oversold pullbacks. But Friday definitely would have been an entry when it was red. We don't like buying green, so if you waited till it rallied up, you missed a little bit. No big deal. But overall, ladies and gentlemen, I don't know why it rallied. I haven't paid really much attention to the fundamentals. I'm sure a lot of people thought this was, they started seeing 2.5% pullback and probably thought it was going to be a big pullback, but it got oversold close to the 50-day moving average, and we've seen it bounce. People got to put money to work, ladies and gentlemen. It's just got to happen. And honestly, my opinion, I'm not really into real estate. I don't like having people living in my house, hoping they pay rent, and hoping they don't trash my place, or I'm going to have to make a repair. One thing I've been telling my son, I try to get him in more into swing trading, which he's done really well when he answers his phone, but he's busy, don't get to answer his phone. So he's trying to stack 10,000 shares of 10,000 shares of JEPQ within the next 10 years. He just turned 18, so hopefully he hits that goal. That's going to be better than borrowing money and being in debt and you'll make the same amount of money on JEPQ that you'll probably make in a paid off house you're renting out, especially with repairs that need to be made. Don't get me wrong. Yes, real estate can grow in value over time. It can also depreciate, and you can also lose money in keeping it up, and people living in it that may not pay you, may provoke squatter rights, who knows anymore. But I prefer the stock market to put my money to work, and so do a lot of other people. So listen to the chart, not the news. Now here, personally, I think rates are definitely going to be higher for longer. I think they might actually have to raise rates. We seen, PCE come out on Friday and it was 2.7%. I seen one article saying it went up 0.2% and consumer spending dropped. So that might have been the beginning of the sell off on Friday. And I think we actually was watching the 3-minute for our entry, and it kind of broke out here, pulled back, and you can see the 3-minute breakout. That's when we entered. So we've been paying attention to more short-term time frames because we're just not seeing the normal market. And it's also keeping us cautious because we're also catching pullbacks quicker. Honestly, we would normally be up more because there's more swings, but I think this transition into shorter time frames actually made, look really good coming to the end of the year. We'll see what we look like. But before I recommend trading options on shorter term time frames or trading short-term time frames at all, you got to get the basic fundamentals down on swing trading. So pick up Simplified Profits if you haven't yet. But overall, let's take a quick look at the market. I'll stop jibber jabbering. We've already went over SPY, but don't forget to look at it on the weekly time frame. I honestly thought it was going to hit the 20-day moving average on the weekly time frame, which is that middle line of the Bollinger Bands. It didn't. Monthly, we may see some consolidation, probably, in that breakout area right there. Got a green month. This thing could rally back up, could hit 550. And then we'll go back to the daily and jump in triple Qs. You can see it didn't get a full pullback either before it really bounced up. That's kind of a bullish candle because you got the sell-off got bought up. I'd see money going back to work in there. This pullback, man, Dow Jones, I just noticed that actually when we were looking at Dow Jones, we were looking at UDow, and it had a 15% potential rally back up to its previous highs, about 17%. It was up only 0.2% as far as the Dow Jones goes. Looks like it had a hard rally as well on Friday. We were paying attention to SPY, but man, they did bounce back. Semiconductors, I mean, this thing just doesn't end. They got bought up pretty quick. Barely had much of a pullback at all. Looking at gold, I would think we're going to see some consolidation here. It's oversold, touching the 50, so it might hold that, kind of swing back up. You see kind of a toppy area there, a little sideways trading. Maybe look for something like this for a few months before it breaks back up. Small caps. Once again, it broke under the 50, but kind of bounced back over. Held the 50 when it dropped back again on Friday and rallied up. So just once again, watch that top. That looks kind of toppy right there. That may be some consolidation. I'm still not really optimistic on the market, but I try to block out all the noise and just read the charts. Lower highs right here, but kind of a bottom built. So this may either break down the low or it's going to break through, get back up to that top. Nobody knows, ladies and gentlemen. You just got to know how to read a chart because that's investor psychology 101. All right. Biotech, you can probably see some consolidating here. Hope so, because that looks, you can easily draw a left shoulder there, a head, and a right shoulder. If that breaks down, which it kind of did right there, you may see that drop under the 200-day and get down about that 65 range. So pay attention to that. Actually, I would kind of expect to see that with the rate environment. Biotech hasn't been hot lately. There's going to be less deals. USO, which is oil, is just trending that 200-day moving average, treading on it. Like some sideways action, but with everything going on, that was kind of toppy right there in that 83 area. It wouldn't surprise me to see oil hold the 200-day and make its way back up. Silver, I've seen that really trending on some places. He had a good little breakout gap up there, but it kind of faded quick. kind of held that area, and you may see it rally back up and break above the 30s. That would be kind of unusual for silver. And this is a cannabis ETF we've been watching. It broke under the 200-day, bounced back over it, trying to hold. The whole DEA rescheduling thing had, very minimum effect. Really need to see how this market transpires over the next couple of years. Personally, I think probably one of the biggest growth sectors out there, besides probably uranium, which we actually traded that back in January or February. That's why we were down in February and up in March like that, because we were scaling in our position. So keep that in mind. It's a big, really a big part of our trading strategy is scaling in, keeping a low average, keeping good cash flow. But other than that, ladies and gentlemen, I'm out. We're averaging about 10% a month for the year. Plan on really crushing it, moving to these shorter term time frames. Kind of got bored, so we'll see what happens. Only time will tell. We could get smashed and end up the year negative 50%. No one knows. But I'm out.